please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
As far as the macroeconomic indicators of the economy are concerned, we are at a dream run. We've never had all the indicators coming together so well, the deficits, the rupee, the foreign exchange reserves and so on, all those together. Talking about growth, also I think we should understand that we have all been used to finding growth as synonymous to few large corporate sector investments. I think the structure of the economy is changing. I think the growth is coming from various other forms as well, and not just the large capital investment. So if you look at consumption actually continues to grow. Yes, you'll have some quarters looking different because of some preponement on account of GST and therefore, but I think these are all transient issues, but overall directionally consumption continues to grow, and therefore even the retail business of the banks continues to grow. The second is the government spending continues to grow, and with the government spending comes a kind of second order benefit to the private sector as well. So as the roads contracts get awarded, some of those contracts come to private sector. As railways contracts are getting awarded, some of the multiplier effect is coming to the private sector. So I think that's the second sliver of growth. Well, yes, the large capital investment is not there, and I think that's going to take a little bit of time before it comes back.
One last worry on growth is we seem to be slowing at a time when the global economy is growing. And, at Stanchart, you would be able to testify to that. Global economy kind of took off in mid-2016. We've waited 3 quarters. We're not exactly at that time we seem to be slowing. Do you think it's something to worry, or is it a matter of time?
No, so Lata, I feel that the economy has gone through some disruptions, demonetization and now GST. And we've seen globally that countries which go through GST actually pre-GST or post-GST launch, 1 year, they do take a bit of slowdown of growth. And post that 1 year, actually we've seen, and we've mapped it for 5 years subsequent to that, we've seen 1 to 2% growth in GDP just because of the GST. So I think we will see after a few quarters after GST stabilizes, we will see a pickup in the growth. The other thing is that as a country, we have a very low tax to GDP rate. And clearly, I think the whole digitization, the less cash in the economy and GST, all these will have a triggering effect, which will take the growth higher.
Okay. So GST plus, of course, public investment picking up, hopefully, with more tax money. Shikha, you all have a substantial amount of equity and debt capital segment as well in Axis, besides the bread and butter lending business. If you looked at the loan growth numbers only for banks, then it looks like, 5 and 6%. But if you looked at total loans to the banking sector, to the commercial sector, then it was a good 12.8%. So not a bad number at all. What is the sense in the current year? Will banking regain a larger or a faster pace of lending? What about loans to the commercial sector? Will it be better than FY17?
What you talked about, Lata, is a phenomena of excess liquidity in the system, and therefore markets being able to deliver debt or equity at a cost cheaper than anyone would have imagined. I would think that, and I'm stepping out a little bit in saying that, but I think India is going to see a regime of low interest rates for a while.